So we finally started to see some dips in this market, and I really love it. I really hope it continues. But I've already started to dip my toes into a few different stocks. And in today's video, I want to give you guys a quick update on what stocks I picked up and why. So there's going to be 7 stocks in total, maybe one bonus stock at the end of the video. We'll have to wait and see. But these are stocks that I just started to buy very small amounts here as they kind of go down. I'm really hoping they continue to go down and then I can buy more in the future. But I just wanted to give you this kind of rapid fire quick update on what I nibbled on so far. And I hope you guys enjoy this update. And if you want to see more kind of updates like this, make sure you hit the like button. It lets me know you like that kind of content. But with that said, let's go ahead and just jump straight into this. Okay, so taking a look at the major indexes, and by the way, this is being recorded on Tuesday night, but the Dow Jones was down 2.2%, the S&P 500 was down 2.8%, and the tech-heavy Nasdaq was down the most at over 4%. And at first glance, that might not seem like a huge amount, but after the past few days, it now puts the Dow Jones back into negative territory for the year, which was desperately needed after the huge run up from the crash. Speaking of which, the Nasdaq skyrocketed from the crash and is still up by over 20% year to date, thanks to so many people having to stay home and needing to use technology to get by and to stay entertained. But thanks to this most recent dip, it's now dropped by over 10% in just the past 3 days alone. And to me, that's mostly a sign of profit taking, most likely, especially in tech stocks that have been trading so well this year despite the economy being in such horrible shape. So I've been expecting some pullbacks for a long time now, and I think we'll likely continue to see more volatility throughout the year, as this is still an election year with two extremely different political parties, in my opinion, that have very different intentions on how to manage the economy. So we don't really know how the market will react to everything that's going on. But like I said, I really hope that this downturn kind of continues, because it's already leading to some very nice dips in individual stocks. For example, in just the past 3 days alone, Apple has dropped by over 15%, Amazon is down over 11%, Facebook is down over 11%, Google is down almost 12%, Microsoft is down over 13%, and over the past week, even the almighty Tesla has fallen by close to 40% from their all-time high after suffering a big crash today of over 25%. So some very popular stocks taking some heavy damage. And there's really many more examples of this throughout the market, and some of them have fallen even worse, have fallen even more, but we just don't have enough time to go through all of them. But let me know which stocks you've been kind of eyeballing, if there's any big drops that you noticed recently, and if there's any stocks that you've been picking up or making any moves. I'd love to hear about them down in the comment section. But let's now talk about the 7 stocks that I went ahead and nibbled at, maybe one bonus stock at the end too. But let's just do a quick rapid fire on those different stocks, and I'll let you know why I picked them up and why I'm kind of hoping that they continue to drop so I can buy some more in the future. Okay, now starting with a brand new addition to my portfolio, that's the gaming company Electronic Arts, ticker symbol EA. And I was actually thinking already about buying this one in the low 130s, but thanks to some bad publicity with their Madden game being poorly received this year and some controversy surrounding them putting ads in their UFC game, along of course with the rest of the market dipping, the stock has now dropped over the past few days by over 10%, leaving them down around the low 120s. I got it a little bit higher than that at about 126, but it's less than 1% of my portfolio, so I have plenty of room to average down if it keeps falling, and that's really what I'm looking to do with a stock like this. Gaming stocks can be super volatile, and sometimes you can find yourself just being down like 30% or 40% out of nowhere. So I usually keep those very, very small in my portfolio so I can very easily buy a lot more if it drops a lot. But even at these prices, this now leaves them with a trailing P ratio of less than 20, which is much lower than some of their biggest competitors, despite having very nice profit growth last year. And they're still expected to average almost 15% growth over the next 5 years as well, thanks to video games being in high demand right now with everyone staying home and a new console upgrade cycle in a couple months, which also leaves the video game market incredibly strong in general at almost $160 billion this year, which will be up by almost a double-digit percentage despite the global economy being in such horrible shape. Speaking of the video game market though, most of that growth is actually coming from mobile games, which accounts for nearly half of all revenues and also saw the highest growth as well. And to tap into that market, I've been recently buying Glu Mobile, who in my opinion had much better earnings in their last quarter than Wall Street gave them credit for, as they reported record bookings with year-over-year growth of almost 80%. Still, it wasn't good enough for analysts and investors, and the stock proceeded to fall by over 35% from their high, which was fueled by more than a 13% drop over the past week as well. At the end of the day though, this is a very high growth spec stock, and I decided to buy a little bit more here in the very low $7 range, and I'll probably buy more if it falls into the $6 range just to have that mobile gaming exposure. Very small spec position though. I won't be making this one a very large one. Speaking of gaming though, my number one largest stock in my entire portfolio, who is the complete opposite of what a spec stock is and also happens to be the company behind Xbox, is the very reliable long-term foundational stock Microsoft, ticker symbol MSFT, and I decided to buy just a little bit more here today. This is stock number 3 that we're on. And this is really a stock that just almost never really dips, so having it drop by over 13% in just the past few days alone was too attractive for me to ignore, and I went ahead and added some shares to my E-Trade accounts, which was nice because I had almost all of my position in my Robinhood account, and as I've told you guys before, I'm trying to spread my wealth out more between different between different brokers. So picking up some here and adding to my E-Trade account did make sense to me. And there's not really much I got to say about why I love them so much. They have the second largest cloud platform in the world with Azure that I think will be relied on even more heavily in the future, considering how many businesses are really implementing more kind of work from home strategies and options every single day, which we know Microsoft is clearly the best cloud option for that, thanks to how well they implement Azure into all their other kind of business services from Microsoft, like of course Office 365 and more. But even just going back into gaming for a second, I really love what they're doing here with their new Xbox Series X being the most powerful console this generation, launching in November for a very reasonable $500 that I think will attract a lot of hardcore gamers. But then they also have the cheaper Series S that still has really good performance but tries to undercut the PlayStation 5 by costing only $300. That's very affordable. I think that can really attract the casual base and help them really build up these large customer bases that they can later use for selling a lot of their services that actually Azure is helping facilitate. Like for example, their new cloud gaming service called xCloud that is launching this month, and then they also have their Netflix-like service called Game Pass that is already gaining a lot of praise from the entire industry. So they can sell those kind of different services to that large consumer base, and I think that's why they're trying to target these consoles at very low prices. Anyway, if Microsoft keeps falling down into the $100 range, I might consider buying even more, despite it already being such a large position. Now, with the economy being in such horrible shape, you guys know that I've become a much bigger fan of those really solid kind of reliable dividend stocks, especially this year. And with this most recent dip, I had to go out and pick up some more of those stocks here too. Well, one of the ones that I've been really enjoying buying this year is of course AT&T, who actually finished the day in the green, but earlier the stock was down to the very low $29 mark, almost hitting $28 there, and I just really like them at these levels because the dividend is over 7% with more than 35 years of consecutive growth. So I went ahead and added a little bit more to my position there also. And then the stock that I bought the heaviest today was actually an ETF called the Vanguard High Dividend Yield ETF, and this is my favorite dividend ETF right now because it's still trading at a very reasonable price, as they are still down over 12% year to date, which by the way, they didn't really fall that much today, but along with AT&T, both stocks were actually negative in my portfolio overall. So I just felt really comfortable buying more to average down, and that gave me a super nice dividend yield of 4% in what is the only ETF that I currently own. Adding to the dividends though, you know that I had to pick up some more PepsiCo, one of my favorite stocks. So this is stock, we're on number 6 now, and this is one of my favorite dividend stocks out there. They didn't fall a lot in the past few days, only around 5%, but even here it's at least negative year to date. And with my dividend stocks, I don't really focus too much a lot of times on the share price, as long as I can still get a very reliable dividend to hold long term. And there's really very few stocks in the market that can even match PepsiCo in that regard, as they've now increased their dividend for 48 years in a row. By the way, ignore what Seeking Alpha says they're about 31 years. They keep glitching for some reason and they're way off, but it's like almost 50 years that PepsiCo has been increasing them. But even with all of that growth, they're still yielding about 3%. So I just felt very happy to add some shares to my E-Trade account, as I love their diversified business across not just drinks, but also solid food snacks. And I think that dividend really isn't going anywhere because of their very solid business. Sticking with the dividend train though, last stock here, stock number 7, I also picked up some more AbbVie, and they only dropped by about 2% today, but I was already planning to buy more anyway because their valuation is just so much cheaper than the sector, usually around 30 to 60% cheaper depending on the metric that you're looking at. And with that cheap valuation, you also get a mouth-watering dividend of over 5%, which they've now increased for close to 50 years in a row. I mostly own them for exposure to the biotech and pharmaceutical sectors, as it's the only stock that I really own in those areas. And trust me, AbbVie definitely has their issues, as I've talked about extensively on the channel, but I'm one of the few people that actually liked their acquisition of Allergan, and I think it'll help them really sustain their already very high cash flows in the future, which will make it easier for me to profit off of that very nice dividend. So I went ahead and just bought a little bit more, and also did it with my E-Trade account today. Anyway, those are the 7 stocks that I went ahead and purchased. Oh wait, I promised you guys a bonus stock, didn't I? All right, let's talk about it. Well, here it is. I finally decided to buy some more Tesla. And you guys know that I haven't been buying this one in a long time. It's really not easy for me to buy at these higher levels with the stock still up by close to 300% year to date. But I have to admit that with the recent falling, leaving them down almost 40% from the top, that was enough to catch my attention, and I decided to pick up just one more share and put that into my E-Trade account. And I know what you're thinking, that's not like a lot to some, but I just wanted to dip my toes a little more before the trading day ended, and it was kind of just like an impulse buy for me, just because I wanted to own some in my E-Trade account versus having all of it like on Robinhood and M1 Finance. But you'll notice there that they've now fallen much more than the broader market recently. So why is that? Well, there's really a couple reasons. First of all, the stock was skyrocketing by so much that a pullback was inevitable in my opinion, but it was also fueled much further because of them selling stock to raise another $5 billion, as well as the S&P 500 surprisingly not listing them on their index even after seeing their market cap surge and a stronger record of sustained profitability, which is usually what the index includes. But here's the thing, if I'm thinking long term, which I'm always doing with a stock like Tesla, then these two things really don't bother me at all. And I certainly don't think that they justify a almost 40% crash in the stock. Now, you could definitely make the argument that the stock had just climbed too much already on its own, and so it needed to pull back just because the valuation was so high. And I made that argument myself in my last video, the video right before this one. But now that it has come down, the stock is starting to look a lot more attractive to me. But just to clarify on those two different points there on why the stock has been kind of falling recently and why they don't really matter that much to me. With the first one, when talking about the capital raise, Tesla's selling stock at these higher prices, that's not really a bad thing to me. That's actually a really good thing. And Tesla has done this many times in the past where the stock kind of climbs up too much and then they sell some stock to raise some capital. And then whenever they run into rough times, Tesla is usually in pretty good financial shape. They usually have a lot of cash. And then also when they want to expand and invest in different projects and different things to keep the growth coming, which of course Tesla is a very heavy growth oriented company, they have the money to invest in those areas. So no, I really don't have any problem with the stock going up by a huge amount, skyrocketing very high, and Tesla going out and saying, okay, we're going to sell some stock then because the valuation is so high. Let's raise some money off of this. Let's benefit from it. Whereas a lot of other companies right now that have really skyrocketed off of the crash earlier this year, despite the economy being in horrible shape, a lot of these companies are actually buying back their own stocks. And you know, that might not be the smartest move, considering that a lot of these stocks have very high valuations. Tesla has always kind of done the opposite of that, at least in my opinion. And that's one of the things that I really like about Tesla, is that when the price goes up a lot, they sell. Now, I will admit that the whole S&P 500 thing, that is a real bummer, because that could have really fueled even more of a rally for Tesla stock, because if Tesla is included in the S&P 500 index, that really forces a lot of hedge funds and different investors to have to buy Tesla stock, because now it's included in the index, and a lot of these people follow that index. So if Tesla's included, they automatically have to buy the stock. And that would have fueled the rally even further. But the reason it doesn't really bother me that much is because Tesla could still be added to the index at any moment in the future. And I kind of just feel like this is more so like insurance for the future, because I really do think that Tesla will be included in the S&P 500 eventually. And once it does, I think there will be a rally off of that. So the fact that it didn't happen here and it dragged the stock lower, and I was able to even buy some stock, and now I know that in the future it could still be added and there could still be a rally off of that. You know, that makes me feel a little bit better about holding the stock long term too. So you know, again, I realize it's a bummer. I know some people are disappointed in that, and especially kind of the short-term traders. But if you're a long-term investor, that's not really something to worry about, at least not in my opinion. But anyway, that does it for today's video. I hope you guys enjoyed this quick update. Let me know if these kind of videos, you guys like these. They do get a little delayed. Like, this is probably going to be uploaded sometime Wednesday morning, because it just takes me a long time to get everything organized and then record and then edit. And sometimes I fall asleep while I'm editing or something, you know, so I have to pull like an all-nighter. But I hope you guys enjoy these kind of quick updates. And if you do, let me know, and I can try to make them a little bit more often in the future. But anyway, let me know if there's any stocks that you guys went out and bought, made any moves. I'd love to hear about those. And hope you're all doing well out there. I'll catch you in the next video. Thanks again for watching. Take care. Bye-bye.